Hey, 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 Steve, what is going on?
Hello, I'm here. Happy
Thank
Monday.
you. Thank you for the intro, Scott. Welcome everyone to yet another edition of the Monday Office Hours, and today is July 16th. All downhill from here. August will be upon us soon, and then, ooh, the exciting time. September. Ooh, it's going to be exciting. But another 6 weeks of summer. So, welcome everyone. Before we get going here, just want to take a brief moment here to make the lawyers happy and just make sure that everyone in attendance is aware of the fact that all of the information that we share with you guys, whether it's this webinar or any of the other 8 ones that we host during the week, all of this information is being presented to you for informational purposes, or we could say educational purposes only. If you need investment advice, what to do, when to do it, all that good stuff, please seek out a registered investment advisor or other licensed individual that can help you out with that type of stuff. All right, and for the new people that might be in the room, maybe you're, part of the test drive, right? Kicking the tires, seeing what's going on here. Well, not only do we have the one-of-a-kind software, right? But we've built an entire community around the software. And what you see on the screen right here are the 5 o'clock webinars that we host Monday through Thursday. Now, of course, what's not a webinar that's up there is up here in the upper left-hand corner, the Traders Room, which is hosted by Barry Anderson. The room opens up 30 minutes before the open. Man, depending on the day, 500-600 people in there at any given time. I'm sure we'll probably break record attendance during the test drive that's upcoming for the week of the 23rd. But Barry does a fantastic job at managing a group that large of traders. Even better, he showcases his trading style using the Trade Ideas technology. Barry's been a longtime user of the product and does a really good job. So other than Barry being the best thing about the trading room, the second best thing about the trading room is the price, which is $0.00. So if you have not been taking advantage of that resource, highly recommend that you do so. Of course, today's Mondays, you get myself and Steve. Steve takes the driver's seat tomorrow for Trade of the Week, and Mr. Andy Lindloff rides shotgun with him. Middle of the week, hump day, we like to change it up a little bit, and that's why we bring in the CEO, Dan Merkin, along with our Chief Technical Officer, Brad Williams. Then Andy's going to round out the 5 o'clock Easterns on Thursday with the Trading Studio, and I'm going to ride shotgun with him. And then, of course, something not completely different, but a different format on Friday. Big hit thus far since we started doing it this way is the Friday support session, starting at 11 a.m. Eastern. And depending on the crowd, a lot of the times we'll go the full 3 hours. So it's just more or less a free-for-all. Anything that you've been trying to get done, any questions, configuration issues, come to that Friday support webinar. You got myself, Steve, Andy, and John in there, so you get 4 heads for the price of 1, which is always a good deal. Now, we've recently phased in 4 additional daily webinars in the form of the TI University, all the way from Beginner 101, which is on Monday, 201 on Tuesday, 301 Wednesday, and then, of course, 401 on Thursdays. I happen to teach this one. So we do recommend that you take these in order just so you can build upon that knowledge base and be prepared for the next segment. You can sign up for these guys as well. So a total of 9 educational, informational webinars going on through the week. So come one, come all, great place to learn and get ahead of that learning curve. Now, we always like to show this. Why? Because, well, it means something. It means that the crowd is resonating with our AI module that we first introduced January 2016. Boy, Steve, it seems like yesterday when baby Holly was born, and now she's pushing 2 years on us. And the good news is she has siblings now, and we've got Holly 2.0 and Holly Neo joining the crew. So now we have 3 AIs. So it's going to be really interesting in another year to look at this same subscriber growth chart and see the difference. So once again, people finding it useful for obvious reasons, which we'll get into when we dissect the Holly trades a little bit later on. Now, of course, This is the ebook that myself, Sean, Andy, and Steve put together not too long ago. It's free. Once again, just like the trading room, go to this web address, you can download it for free, and it's going to get you geared up for when the market does eventually turn. We don't know when, but it's just inevitable. There will be another bear market at some point in time. So if you've never been a big short seller, or you're not familiar with the whole short selling game, be a very good idea to go ahead and get this book and familiarize yourself with the content matter. That way you're prepared when the time comes. And by the way, this is where we released the book. Now, we can't say we did this exactly, it was exactly intended, because we didn't know what was going to happen here. But we can see, boom, the people that got in early probably benefited from that information. And of course, even though we're kind of range bound pecking at, new highs on the major indices, which Steve will get into here in a moment, there are days where there's a lot of downside drafts, so these techniques can be used, hey, even in a bull market like we're in, because some days turn out bearish, right? So get that ebook, absorb that information if you haven't done it already. So today's class, sticking with pretty much the same type of compulsory curriculum that we always do here, because, well, if it's working, why mess with it? So Steve, if you're ready to talk about
Sure.
the tracking ETFs and where we've
Yep.
gone and where we might be going, let me pass the baton over, and you should have it.
All right, let's get the screen going here. Hello, everybody. Welcome to my desktop. All right, so let's take a look at what happened since we last spoke last Monday in the markets. I'm going to zoom out here to start with the S&P 500 ETF, SPY. You can see right here, here's where the ebook was released, but it's like, a giant rubber band was plucked, and the, gosh, what's the name of that? I'm losing the scientific term of it, not the resonance, but the amplitude of the string bouncing back and forth is slowly winding itself back to a neutral. But this horizontal line up here is very significant. I drew a lot of lines last week, but this one horizontally is where all of the supply is probably resting and waiting for an assault back to these levels back here. And, we'll see what happens. What's happening right now in the last 5 days, my train of thought was kind of stopped there for a second. This is a big, wide looking cup and handle. Okay, so we've got higher lows bouncing off that 200 I've talked about ad nauseum. This higher low didn't even get close to the 200. And now we're starting to consolidate sideways. So back into that consolidation dissertation I've talked about, where there's two ways to consolidate on a daily chart. You can pull back in price for a few days, or you can move sideways in time for a few days, and that's the more bullish of the two. And that seems to be what the S&P was trying to do here the last 2 days. We got up here close to this level, kind of like a magnet with the same poles resonating, pushing against each other, and at these levels of some resistance, and then maybe we'll have an assault. This is the base campers acclimating with the Sherpas here to new base camp levels. Maybe it's what we just need, a few days of sideways action and then a push. I feel like a push, or at least an assault, an attempt is coming. It's a foregone conclusion. I think price action is going to want to test this level and then see what we have. But again, the bigger picture, the S&P's the most diverse ETF we're looking at. And it's showing us a long, drawn-out cup and handle, and we're gathering steam here in a sideways action to possibly make an assault on these highs back here. The Qs, the obviously technology-heavy Qs, a little different story. They actually pushed through that level. I'm going to move this level back up here, that orange level for the most part. I'm going to put it right there for a good reason. I'll come back to that in a moment. But we broke out from that level, and we've had 2 or 3 days now of closing above. Not as much pullback in the Qs for intraday, just kind of a sideways doji. But again, I've got some more color here to add in a moment. I know people want probably itching to tell me what the market's doing after hours, but let's look at what it was doing when it went out before after hours to start with. Also, the IWM is showing kind of signs of a double top up here. It was leading the way early, but now the NASDAQ seems to have taken the baton, and leadership is showing up in tech. because today's red candle and weakness was pretty much the weakest of the four horsemen here. If we go to the Dow, being the final four that we've looked at, a green candle actually, and closing up and trying to actually close above Friday's highs. So a lot of different mixed signals in the way in which the market went out. However, some of you that are on the ball may have noticed we do have some aftermarket news here. If we go to our post-market charting, Netflix had earnings, and the earnings were very disappointing. I'm a student of price action. I try not to get too involved in the hows and whys and fundamentals, but I have heard that they're just really reaching out and paying a lot of money for content. So they're starting to maybe see some growing pains over there in Netflix. That's a 57 point drop after hours, over 10%, pretty big. And if we go over here to the daily chart, what does that correspond to? Just notice, guys, the after hours, the green tag over here on the right is showing 343.44. I don't even need to have post market on to have that information. So if we go back and look, well, that's just above this blue line that I drew back here, which was prior breakout way back in April of this year. We had to break out from this 340 level. Again, look at that, kind of a cup and handle in the Netflix price action in hindsight, 2020. Which is kind of what the S&Ps are trying to do here currently on a longer time frame. But nonetheless, it broke out from these levels, and look at this. It doesn't take long after hours for it to drop and give back, 2.5 months worth of upward movement there. And it gives it back all after hours. So, if you're the kind of person that likes to gamble and, there's a gambling table for you right there. When a big stock that's been a high flyer is priced to perfection, comes in and misses earnings, you're going to get a 15% pullback after hours or 12% or whatever this is. But technically, it looks like the price is stabilizing at these tabletop levels back here, which was prior resistance in the past. So great example of how you can give away something quickly in one night. Qs, well, Netflix is definitely a solid NASDAQ component. So NASDAQ is taking a little bit of a beating here after hours, getting back close to this gap down here. So if we go back to what we were talking about, well, there's the green tag I mentioned, which shows us that it's trading around 177.78, which is also right in line with where the prior double resistance was before we broke out a few days ago. So you can see that price action falls like a safe in space, like a vacuum when you have after hours news of significance, but it will tend to always find support at levels that make sense, the pivot levels that I often talk about. So if you're somebody, who thinks that something might be overreacting in aftermarket, you could jump in at these levels. But personally, I wouldn't, because think about it. Tomorrow we're going to have people who aren't even aware of what's happening in aftermarket. They're going to come home tomorrow after work and start putting in sell stops. So my point is, it's a difficult game to try and play a bounce after horrible earnings. My point is, you're going to want to let that thing wring out like a rag for 3 or 4 days and get all that weak, dirty water out before you even think about playing a bounce. So that would be in the case of Netflix, of course. So that's what it's doing after hours. To the NASDAQ, the S&P, not so much. I mean, it's basically back to the low end of today. If we look at the S&P, we're still close to lows from today's session. So not too much damage there. But Netflix, earnings season is here, July. The first big tech FANG company to report. Not too good. So could be a shot across the bow, something to keep an eye on. But again, the S&P sideways consolidation to essentially move through and try and test those prior highs, I think is definitely in order, and hopefully coming soon for the bulls. But still no reason to start talking about being bearish, except for just this one little chink in the armor here in Netflix. We'll see, how the others start to report. I believe Facebook reports in about a week. So for the next week or so, we've got some big guys reporting, and maybe the earnings season will dictate where we go. Lastly, before I turn it back to Jamie, the XLF was the sector of interest today. The baton was passed, I think, to the banks. If I go to my sector top list over here that I use a lot, you can see XLF led the day higher today. Followed by the banks, pretty much the same thing, national banks and regional banks. But XLF, really a nice pullback. Look at that. Look at how it filled the gap there on that daily right there. I'm going to draw that line. For the most part, it filled that gap, and then it took off. Sometimes this is a great example of how the second mouse gets the cheese. The people that buy this first green candle get wigged out, can't handle the pullback, only to see in hindsight that it was a perfect pullback and a shakeout. to the gap fill, and then it decides to go today. It's the dastardly price action that we have to work with, guys. But that was where the strength was today, and that's some of the things that caught my eye. And that's it. Back to you,
Yeah,
Jamie.
this is Steve. Later on, towards the end of the webinar, we'll talk about the XLF and a couple of the other the banks that came through the bullish daily candlesticks, and there's a little interesting play here. Maybe it gives us an idea of what to expect moving forward, but we'll get into that a little bit later. And with Netflix missing and having the first big spanking in a while, yeah, it reminds me of maybe, I don't know if it was quite a year ago. It was kind of the running joke on the internet. Hey, well, just put your idea on paper and you'll get your own series on Netflix, right? It seems like everybody and their dog was getting their own series on Netflix.
And now they've got a glut.
Yep. Yeah, maybe that was a sign. Well,
and
in
everybody
retrospect,
wants more money because they're looking at the stock price and they want to re-up their licensing.
Exactly. But of course, once you watch all the stuff on Netflix, then what? Which sounds funny, but a lot of people have done that I've talked to. Okay, let me push it back over here. And us old timers remember when Netflix was just a mail in your CD.
Wasn't that long ago, really.
That was so cool. Okay, so hopefully you've got eyes on my screen, Steve?
Correct. Yep.
Okay, perfect. So let me just pull my cheat sheet back over here. Get off the topic here. All right. So thank you for that market recap, Steve. We'll see what happens. So let's talk about expectations. We always try to generate decent expectations or realistic expectations, and that can be contingent upon, hey, what neighborhood are we in, right? And of course, we can reference the daily chart for that. Steve's already, pretty much went over this, so we see right at that area. So it's going to be, very telling over the next, the remainder of the week, whether we decide to go up or just kind of coast sideways here and play the range-bound game. So, when we come into the day, we have to keep the prior day's action in mind as we start to form this little flag area here, right? And of course, we just stuck right in there today. So that's the first way we try to derive some type of expectations. Then I like to check out my compare count readings for the big cap stocks, comprised of stocks that have a market cap over $4 billion. See what the big stocks, try to get a read on what the institutions might be doing. So after the first 15 minutes this morning, this is what I had on my big cap movers, 4 billion market cap or higher. Accelerated selling in the first hour, or excuse me, 15 minutes, stocks hitting lows versus stocks hitting highs with accelerated 1 minute volume. Trying to get a little read, trying to pick up on those digital footprints that the institutions might be leaving. And, pretty close to 50-50 here, but a slightly 51% negative bias after the first 15 minutes. So when I see a reading like this, 50-50, 49-51, what does that tell me? Not a whole lot other than, what? Anything goes today. There's going to be some decent shorts. There's going to be some decent longs. Very small percentage are going to follow through. A lot of them are going to be snapping back. And that's kind of the way the day played out today. And we can see when we get into the hollies, just kind of a back and forth day. Struggled to get green, but ended up green, just not by a whole lot today. If we even look at the SPY today, here's the 15-minute action, right? Post market over here. But what do we have? After the close of the first 15-minute candle, when this one opened, after those readings, what do we have? We had this little swoosh to the downside. But, we're thinking to ourselves as that's occurring, well, here's the room. If it gets down here and penetrates that wick from Friday, well, then might be a little bit more concerned. But stopped well short of that. And then what do we have? We had the downside. We had the upside. Sideways, more downside. Then we had the upside. So anything went. There were long and short opportunities pretty much all day. But when we have a day like today, pretty much going into that second 15-minute period, or 9:45 Eastern time, 6:45 California time, what does that tell me? It tells me that the patterns that you look for are going to be there. There's just not going to be near as many of them lining up perfectly like we want, right? The animals are going to be there. They're just going to be a lot more sparsely populated, right? Because a lot of the ones we pull up are going to be too stretched out, way past that entry point for a long or a short. So once again, seeing this after the first 15 minutes, anything goes. So now let's talk about the hollies, right? And by the way, this little segment right here, don't forget your holly homework. I've drummed up, let's see here, I think 10 to 12 price alerts, which I'm going to be handing out at the end of the webinar today. And I think, let's see, most of them are holly. 1, 2, 3, 4, 6 of them are hollies, and then just 3 additional ones that I found pretty interesting. So I'll be handing out those 9 price alerts at the end of the webinar today. So you can watch them moving forward the rest of the week. If we do get some good upside draw, well, could be some interesting plays on the horizon. Of course, hopefully everybody will get over the Netflix spasm, and we'll see what happens moving forward. So let's talk about the individual hollies today. Which ones did good? Which ones did, well, I think we're all green here after the day, except for the original, which Holly AI, the original, I think only had 2 trades today. So let's just switch back over to the Holy Grail segment real quick here. Take a quick peek. Waiting for those to load up here. And you can see here, pretty sparse on the strategy complement. We had a total of 1, 2, 3, 4, 5, 6 strategies. A little bit on the low side, you know, regulars about 9 to 10, can get as high as 12 to 15. And then the low count could be anywhere between 3 and 6. So coming in on the low side today, and only 2 of the strategies issued trades. Got a winner, got a loser, and here they are. So, you know, pretty much the original Holly, kind of thinking what I, you know, kind of sharing my sentiments earlier. Well, there's just not going to be a whole lot of stuff out there for a statistically biased system. Not Holly 1.0 anyway. However, when we get into Neo, you're going to see a lot more trades, and this guy kind of splitting the difference. So we had 2 from original Holly, 14, and we can see the numerical values up here, and then 24 trades out of Holly Neo. So let's go ahead and click back over to 2.0. Come on, mouse, work for me. There we go. And presto. All right, so Holly 2.0. All right, you can do it. There we go. Okay. So more strategies showing up today with Holly 2.0, but you'll notice a bias on the short side, right? So we had 3, 4, 5 shorts and only 3 longs. And let's just take a look at the trades when they first started coming out. And what do we have? 10 minutes into the open, we had 2 trades being generated, both on the short side. Third one followed up about an hour in, not quite an hour. But we can clearly see here, Holly thinking, you know, Holly 2.0, riding this downward momentum, but not a whole lot of profit on these 2 shorts. You know, a small loser on the YEXT, small winner on the CSTM. So not knocking the socks off, you know, during this period right here, simply because, well, the statistics, the numerical values, the traps that Holly lays, which are the strategies, you know, they're very specific. Thing has to be a very specific shape to fall in there. And even though we did have some nice downside draft today, just not a lot of these parameters on these very specific short strategies were met, right? And of course, we took a bounce off the bottom here. So let's do this. Always like to go over a couple of examples of risk on and risk off. But looking at what we have here, and by the way, the vault, this is a newer strategy, and we were all chatting about it on our trader channel today, trying to figure out who wrote it. Steve, I thought this was one of Michael Noss's productions.
I thought it was Michael's, wasn't it?
But he said that he didn't do it, right?
I didn't catch that. We'll have to verify. I didn't see that part.
Anyway, I think it might be one of Michael's, right? Or it could be Brad's, but I think it's one of Michael's. But anyway, very interesting. And I think we had a small bug in the system, and that's why we test these things ourselves, because the vault. Let's just go ahead and sort by strategy here. And we can see the vault had 1, 2, 3 trades, 2 winners and 1 loser. But for some reason, and this is in risk off mode, let's just clarify that, okay? 0, which would be considered a flat or a loser, and then 2 winners in risk off mode. However, when we look at the panel over here, it's saying 0%. So we've already made our developers aware of that. Should be showing, you know, a win percentage in there. Looks like the win percentage is correct, 66.7, 2 out of 3. But for some reason, there's a 0 value there. Just in case anybody was wondering why that's showing a 0, this seems to be a little bug, but we're going to get that fixed. But otherwise, hey, you took a flat, and this JP, what a nice little bottom play here, right? We got that selling coming in. We got the bottoming wick coming in here. We got this guy showing, and then Holly's like, hey, looks pretty good to me. Taking a look at where we were in the daily, right? So if I put my cursor right here under the bottom of that day, lining up kind of perfectly with that area that could have acted as the support, which it apparently did today, back from December, right? And then about as pain-free of a trade as you can hope for. As soon as that entry signal was called right there at 1550, just boom, boom, boom. Never even looked at the stop loss here. So not any spread though, a great trade, and Holly hit it just about perfectly. The only target hit from this module today. Just everything worked perfectly. So even if you would have stayed in this thing till the close, boom, as soon as it got profit target was hit, well, we just did the sideways dance into the close. So on this module today, not a whole lot of risk on versus risk off to have been captured. I mean, we're looking at about twice the amount that was made on the OPTN vault trade, but nothing to write home about, and that's at the close. So 14 cents, Holly gets out. I mean, yeah, she could have top ticked it, but that's the anomaly, not the norm. But what I will point out is this max profit column right here, okay? Max profit is showing us how much the stock was up while Holly was still in it in risk off mode. So we can see she plucked 14 cents, but it was as high as 64 cents before she decided to pull the plug here on a profit save, right? And I always like to show this column because out of the trade count of 14 trades, only 1, 2, and we could even count this penny. We could say that only 3 trades out of 14 were never really in the money, right? And getting in the money is half the battle, right? Nobody likes to hit something and then immediately be in the red, you know, wondering if you're going to get stopped out. So just always like to point this out. Max profit column on that number of trades being just in the position to exit for a profit, that means something, right? Because if we're never there, if we're never in the position to take profits out of the market, well, that's a problem. So we always want to be in the money as quickly as possible, obviously. But this is a very eye-opening column right here. If you haven't been watching it, you might want to add that column. And if you don't know how to add the column, you just right-click, select columns, find the column over here on the right, push it over here to the left, and just do the opposite if you ever want to remove any of these columns. So a nice little solid day. You know, another thing I'd like to point out about the price action and how her blotter matured on the day, and this is another classic example right here. If we treat this just like a stock chart, right, as Holly piles into the positions, a small drawdown, there's nothing wrong with that, right? Matter of fact, it's kind of, you know, kind of par for the course a lot of the times. Sometimes she'll get in the money immediately, but just as if we were piling into 5, 10, 15, 20 positions, a lot of the times we'll take what's called a little drawdown. You know, it looks like she drew down to about 65 cents and then boom, off to the races and reaching almost $2.20. Look at this as the equivalent of viewing max profit. You know, max profit for the whole, you know, portfolio that she was in at the time, nearing 220. And then once we see it start to, you know, back off here and do this little action, whoosh, all the way down. But we can treat this, you know, when we're trying to figure out, okay, things are kind of choppy on the open. We got those, you know, 49, 51 compare count readings. You know, some things are going up, some things are going down. But when do we know when to press on the gas to really start getting a bit more aggressive? And that would be at this break point. As soon as that yield curve gets back up here, and if I could mark this chart up, I would draw a line straight across from there. We just treat it like any other opening range break of a stock, right? And we can see exactly what happened after that. So just keep that in mind as you move forward. When you see Holly's equity curve underwater as she's opening up all her initial positions, if it comes back to this level and the market's not just falling out of bed, doing that inchworm action that we had on the SPY today, a lot of the times that can tell us when to get a little bit more aggressive. All right, so now let's go over and check out NEO, because that guy was really busy today. What do we have, 24 in here? Yeah, 24 trades. Keep an eye on the time here because it's easy to get lost in Hollyland. Looks like questions panel is clear for now. Cool, cool. All right. So twice the number of trades as Holly 2.0, 24 trades total, and kind of just the opposite of what we were looking at earlier. I mean, underwater for most of the day. Brief period of green, comes back down, does this little gyration here. But on this guy, some very interesting trades, all right? And I'm just going to sort by risk on here. Not the type of distribution that we typically like to see. We got a lot more red down here, a lot more stop hits today. What do we have? 1, 2, 3, 4, 5, 6 stop hits today. Holly Neo, stop hits are usually, not this plentiful, but looking back at that whipsaw action that we had with the down move and the up move, not that surprising. So let's see here, TRCO. What an interesting short trade this one was. Number one, beautiful entry, and then just boom, looks like the opposite of that nice upside trade that we were looking at earlier. As soon as Holly calls the short, just boom, off to the races here. Never even threw us a wiggle. But check out this daily. Gonna expand that out just a little bit here because, I mean, we're literally in the void. Not quite, but if we draw a line here, I mean, it can't really make a whole lot of sense going all the way back here. For the system to put that short on here just kind of perfectly, right? Not initially, but as soon as it gets back up close to closing that gap or that little area right there, we get that short put on, and then boom, just works like a charm. Now, trying to pinpoint where this one might bounce, I mean, we had to go all the way back here for this little area of congestion, but man, TRCO, talking about playing that game from the electric company way back when, which one of these days is not like the other? I mean, what a big day for that stock, and not even an earnings play, right? The stock doesn't have earnings for another 17 days, and it's going to report on the open, but a nice big spread between risk off and risk on. So when we take a look at the 15-minute here, of course, this little shaded block is Holly's time in the position, and she stayed in it just long enough to get her profit target hit, right? So the target was hit, everything's fine, everything's good, and then what do we have here? Boom, boom, boom. Now, for those of you who might be, seeing this for the first time, you can see that I can toggle back and forth here between risk off and risk on every Holly module. So this isn't something that you have to pick before the beginning of the session. It's better addressed from a trade by trade basis here. So if we took the trade with Holly here and we're in the money and we get our profit target hit, fantastic, right? Now, whether we had it out there waiting or whether we just see Holly getting out and we take that money as well, doesn't really matter. But, here we have this nice downward progression. Things are working as planned. So until you get really used to identifying levels on the charts and becoming comfortable with them, it's always a good idea to do a little bit of both. So we can always take that profit target with Holly. That's a great thing to do. But if we think there might be a little bit more movement left in the stock because we like what's going on the chart, now this one wasn't probably not the easiest one to try to pinpoint on where it might stop here, but levels back here, that's just where it happened to stop. But that was up here, and we still had a little bit more juice in it here. So if we would have kept that second lot, said, you know what, we think there's a little bit more to go here, whether you use your hard stop or whether you reverted that second lot back to a break-even stop, and that's really all just based on your risk tolerance. I like using the break-even point because we're locking in a winning trade. You know, we're going to make that money on the first lot regardless, and if we can keep our losses to a break-even, or maybe a few pennies past that point, then we're still locking in a winning trade, ensuring that worst case scenario, this second lot rolls back against us. We made the money on the first lot, but in this case, we would have gotten paid, and our potential additional alpha would have been somewhere between, you know, here and here, 91 cents, all right? Even if you got 35, 40, 50, that is really good over time, right? Over hundreds, if not thousands of trades in a trading year, that can really, really add up. All right, a little bit of juice in this one, I'd say, 49 cents versus 239. Of course, that's at the close. You know, we had all of this action to contend with before the close, right? So a lot of things happening in between here, right? So nice entry from Holly here. We get a little sideways action, and then what happens? Not like the other two trades that we've looked at here. We get sideways action, which isn't necessarily a bad thing because buyers and sellers become equal. Of course, you know, look at the wicks here. We got wicks at the top, we got wicks at the bottom, alternating. And then, of course, boom, this one gets stopped out. Happens from time to time. Now, Holly pulled the plug on this one early, as we can see, reduce risk. So technically, Holly didn't get stopped out. Why? Because of her reduced risk, her ability to pull the plug on a loser early, just like she can pull the plug on a winner with the profit save functionality. And why does she do that? Well, because after she made the entry, we're not getting north of that entry signal right there. So the longer that she's in the trade and the stock's not heading in the direction that it's supposed to, well, this time decay kicks in, and after a while, she can go ahead and minimize the damage. And in this case, she did keep us from absorbing the full stop down to 2005. So here's what you want to do when this happens. Maybe you're in the trade, maybe you're not. Lord knows, I don't think anybody was in all the trades, especially from NEO today, just because of the sheer number. But interact with Holly in every capacity, not just paying attention to the winners, but when you get a lull in the activity, you should be scanning all the Hollies and going, which ones have been stopped out? Which ones are close to getting stopped out? Which ones might be below the stop out? Because depending on what the chart is telling us, you know, second occurrences, just as Steve was talking about earlier when he was illustrating the action, I believe, on the XLF, sometimes it's that second mouse that gets the cheese, right? So we had one hit through the entry signal. This guy got close, but we didn't see that signal again until way over here, right? So if we see Holly out of the money or stopped out, we can kind of set up a couple of different ways to handle this type of situation. We can set the price alert for the original entry signal, or and for that second occurrence, and we can see that once it got back up here, it worked, right? So that's considered a trade around. Or once we see it down here, comes and stops us out, even takes a little bit further leg down but doesn't penetrate lows, and then we start to green up here. Once we see this type of activity, we can think, well, I could get a price at the stop, right? A price at the stop, which is a much better price than Holly, and my risk is going to be a lot less if I use this little 45-minute area right here as my stop, or here, just wherever you feel comfortable. So a lot of the times, once the damage has been done on that second occurrence, we can swoop in here. And of course, you know, I'm describing all of this in hindsight. It's a little bit trickier, obviously, in real time. But once we see these bottoming wicks like this and then some green candles, well, that gives us a little bit of assurance. So we could have possibly, you know, and I do this a lot, you know, sometimes a good entry is the stop out, but it depends on the day, right? And it depends on what's happening on the chart and if you can stomach that risk. So just keep in mind, sometimes you can get a better price than Holly and take less risk on one of these trades where the timing didn't work out so good. Because a little blurb about the statistical probability, quarterback, we can see, came into the session, expected performance 62.5%, right? So this statistical probability is good for the day, right? and depending upon second, sometimes even third occurrences. Just keep that in mind. When Holly loses, the timing is off, just like when we lose on a manual trade. Well, it stopped us out, and then it turned and burned and went up 3%, but we got stopped out. Happens, right? And how many times do you go back to the well, right? You might hear that term a lot too. A lot of the times it's used in a negative connotation. Well, I was doing really good trading the stock and I got greedy. I had to go back to the well and then gave half of it back, right? Well, this is going to a different type of well. When you go back to the well and you're using statistical probability, that's a much different well than go back to the greed well.
Than a habit. Yeah.
Exactly.
Yeah.
So I hope that makes some sense.
Hey, I'll talk about ABUS if you want. I got a few things to say.
Yes, that was
Let me
that was
put
next
this
up. By
back
all
over.
means, Steve,
All
please.
right, so the
You want
ebook
me to
that,
throw it back to you, or you want to
no,
use
we'll
my
just use
screen?
this. This is
Okay.
fine. No, notice the arrow there, the beautiful entry fading.
Mm-hmm.
That's a short sell fade. In other words,
Mm-hmm.
go back to that candle, the big down on the low, the big red candle on the low at
Mm-hmm.
10:57. That was the prior day's close. And you know, if you're going to be the guy who waits to short things when it feels safe, in other words, it took out yesterday's lows, and you're going to hope for some more additional momentum to the downside, it just never seems to fail that you're the one who kind of jumped in first, like we talk about the second mouse eating the cheese. And so what I'm getting at here is Holly created a great example of a short bounce. You've heard the term buy the dip. We've heard the term buy the dip ad nauseum for the last 8 years, buy the dip. Well, the opposite to buy the dip, and this is the chapter that I wrote in that ebook, that's why I wanted to take this example, is called sell the rip. And that's how you're going to make money on the short side when you're shorting stocks and when the market does turn, and that's the basic bear market backdrop of what we have. Going back to that example on that candle, you know, waiting for it to break a low, short selling is a different dynamic. For some reason, the price action is just a little different. And what I'm trying to do is kind of highlight that the people who try to pile on, there's a term for it, it's called shorting in the hole. You're shorting in the hole, yesterday's lows or yesterday's close or some sort of significance where it took 4 or 5 red bars to get there. Well, just like I talk a lot about how I don't like to buy 5 or 6 green bars, I like to wait for the pullback. We're doing the opposite here because we're short selling. And the whole point of me wanting to talk about this was that that's one of the chapters in the book, Selling the Rip. And it gives you a much better leg to stand on for the entry of a short sell. Jumping in and shorting into the hole might work, but you're going to have to sit through some pain and agony first. And that's not fun. And a lot of people tap out halfway through and then they get upset, you know, why didn't I just wait for the bounce? And so Holly gave us a great example today of a beautiful entry of a weak stock. Go back to the daily chart. I don't want to say it's a weak stock. I want to say it's a tired stock, okay? It was definitely trending, but it was showing some signs of 4 or 5 candles there of green candles, and now it needed to come back and take a big breath. And if you shorted at yesterday's close, it tried to bounce you out first, but look at what Holly, the AI, is demonstrating. It's demonstrating how to be patient and wait for the bounce and fade the bounce and sell the rip. And so I think that was a great example of how the AI going forward is really going to help people when the market does turn, or people do want to focus on short selling stocks. It gives you a much better sense of maybe when to try and short in the hole, because that's not always the wrong move, or when to maybe wait for an oversold bounce like Holly did here in ABUS. And that's all I wanted to say.
You know what I really love about this one, Steve, is it fits your pattern, the sell the rip. It also fits my pattern that I illustrate in the ebook as well, which is just simply shorting a nice, pretty range break here, right? So get this, ladies and gentlemen. If you read the ebook, you recognize this pattern, and instead of shorting down here at lows, you're shorting this nice cozy range break with some really acceptable risk using the prior 15-minute candle. I have to put it right here. So shorting right here, get that range break, you get this nice push, and then later on you have a second opportunity to play the stock short again via Holly, and then seeing, okay, not only do I have statistical probability behind it because Holly's playing it to me, but I remember this from reading the ebook, and this is Steve's Sell the Rip, right? So 2 really great examples right there on how you really could have taken advantage of ABUS on the short side in a couple of different ways. Good stuff, good stuff.
All right.
All right, so let's see here. We got to take a look. Let's take a look at one more short sell today. When do we get to look at short sells, Steve? We're mainly looking at longs, but a nice little assortment of short selling strategies kicked off today in trades. So, hey, not a bad entry right here, selling that little 15-minute rip right there as the stock puts on the brakes. Let's see, putting on the brakes, let's just take a look at the rankings here. So, downward dog came in at the most, putting on the brakes, still a healthy 63.1%, and never even throwing the curveball there. So once again, Holly being in the trade and risk off, take a little bit more risk, peel out, set that stop loss back to break even. Once again, you could have stayed in this one, and instead of just taking the initial 22 cents, we could have did a little bit of both maybe, and had a chance to double up on that alpha. And let's do this as well with this larger blotter of trades. So out of 24 trades today, if we eliminate the zeros, and even if we eliminated the 3, 4, and 5, all of these trades, plenty of time to decide what you want to do as you were in that trade, and we're in the money, right? Not saying that that's what you would have made, but just putting on that number of trades in this market environment and a pretty crazy mix of longs and shorts, that's very powerful. That's a very powerful metric. So just keep that in mind as you move forward. But hey, all in all, after it was said and done, how did the cumulative group do? Well, 8 cents, about 90 cents on a lot of trades, which reiterates or kind of solidifies what my expectations were from the very beginning. Anything goes here. And then when we see this type of short long activity, the SPY, and reinforcing that because we had short, hey, let's go long. Oh, we're going back down. Now we're going back up. So truly a day of anything goes. So just keep that in mind. As you move forward, maybe you're a compare count watcher like myself. But when you see those 49, 51 days, just let that little bell go off. Jamie pops up in your head. Anything goes today. So I think that's about it for the Holly highlights. And unless anybody has any specific questions about Holly, then we can move on to a couple other things here. And looks like the question panel is vacant for now, and we still got a good 10 minutes here. So on the Holly recap, what I'm going to do here real quick so I don't forget is I'm going to copy all of these guys right here. Now you'll see these are all the ones I scanned through all the Holly trades today, and I picked out the ones that appealed to me, right? And if you start looking at those patterns, you'll get a good feel for them. And then just a couple of other ones that I think might be interesting. Hey, wrestling, for some reason, the WWE is a publicly traded company and doing, from a technical standpoint, not too shabby. Of course, I couldn't bring myself to buy this stock way back here to my own misfortune. If you're in it, good job, but we're about to start pecking at all-time highs again. Now, what I want to say about these price alerts, let me just go ahead and copy these to share. There we go. And let me find my chat panel. All right, those guys have been dropped. And so, assuming, and of course this is one scenario, maybe we are going to move sideways for a few days. Maybe we're going to go pop this Solari tomorrow. We just don't know yet. But when these alerts do start firing, you're going to notice the chart patterns are nice. But do yourself a favor and just immediately look at relative volume. Start watching how the stocks react based on relative volume. Simple rule of thumb. You see one, well, there might be some follow through, but man, when you pull up the ones that might be showing 3, 4, 5, 6, 7, and they haven't moved too much, and that risk is acceptable on the intraday or the daily, just hit that button, right? Because they're quality patterns, and then of course the relative volume is telling us, you know what, full tank of gas, right? Full tank of gas. We're not going to slam on the gas and then run out of gas after we get about 3 or 4 blocks down the road because there's no gas in the tank. So of course, even a high relative volume number, of course, is no guarantee, but it sure can be eye-opening, right? So when these things do start firing, just give the relative volume a little look, see what it's at, and then watch what happens. All right, so those are in the hopper. That way I won't forget to drop them in. Now, in closing, I want to talk about a couple of good plays that came through the turbo up, no resistance, because, you know, this doesn't matter if it's an up, down day, there's always going to be stocks that have to be acquired, right? Now, this guy was a little quiet today compared to how many he usually spits out. But we did have some really, well, two plays came across. I'll circle back around to my comment earlier. On a day like today where it's anything goes, your patterns will be there, there'll be less frequency. More, the intact patterns will be fewer, right? Because we don't want kind of sort of versions of our patterns, we want them to be exact, right? So let's see here, VFC, and I think let's just go back to the 5 minute here. Okay, here's the alert on VFC, came through Turbo Up family. What I've done is I've just popped out the strategy and pointed the window just to that symbol so we can see all the hits. So we can see right here at this nice little break point on the 5 minute candles. We can see the prior high was back here on that wiki open. And then as it popped through, hit that new high, we got this nice alert here at 87.98, and then a little sideways action. Hey, we've seen that before, but assuming we're using the prior 15 minutes, not including that entry candle as our stop loss, would have been right about here somewhere. So a very acceptable risk. And then we got this one on a nice upward trajectory today. A little sideways action, and then, you know, northern exposure. All right, so not a huge move, 88 bucks up to 88.80, but it's the pattern that we're looking at here. Nice pattern, nice risk, thing worked. The other one, and only two of these guys today were good timing. NVCR, another one. I mean, this one was just gorgeous, right? Prior high, back here, it lines just a little off. And it wasn't the big candle where the alert came through. It was this little bitty guy right here on the 5 minute time frame. So even if you bought the top of the candle, it was money, right? Perfect, perfect. Once again, the same pattern that's illustrated in the ebook in my section. You know, the one that we looked at earlier was just that simple range break to the downside. This is the range break to the upside, right? This is our entry candle right here. 5, 10, 15 minute look back. We can stomach that risk. And boy, talk about warm and fuzzy and snuggly. That's a whoopee of a of a stop loss if I've ever seen one. You know, here's our risk area. Reward was all the way up to here, and that is definitely what we like to see, right? Of course, the added benefit of the guys that are coming through here, when we look over here, what do we see? NVCR enacting the same pattern, going through the same pattern on the daily as we're seeing right here. It's always a good sign when you get these patterns to line up on different time frames, right? That's a good thing. So even though few and far between today, a couple of really choice entries, of course, NVCR, definitely, I mean, man, it's just hard to beat these types of plays right here. And in closing, I wanted to just quickly showcase those, but what I found really interesting today, as I've said many times, window quickly becoming one of my favorites, the bullish daily candlesticks, which is one of Andy's creations. And of course, just like mine, Steve, Andy's, and Sean's, if you want any of the windows that we like that are our favorites, you can always just come over here to the channel bar, cruise down here to channel 4, open that layout. You're going to see a huge amount of windows that are all shrunk up, but you can just pull out the one you want, right click, save it to your cloud. Those are all of mine, Andy, Steve, and Sean's favorite windows. So this little guy spit out some very interesting information today because, as Steve was pointing out, top performing sector was the XLF. So I was checking out all these stocks that came out in the first 10, 15, 20 minutes, which were this little group of bank stocks, right? WFC, Now I'll just manually pull these up. All right, so WFC after the open, boom, a nice little push, a little sideways consolidation, and then a nice push higher to the close, right? Now, why were these being identified? These were the little washout type candles here, or not the doji, but if we kind of go back and take a look at the history here, the bottoming tail is the term that was eluding
Maybe
my
you
brain
mentioned it,
here.
Jamie, but I just want to remind people that this scan will refresh overnight tonight. So tomorrow morning,
Mm-hmm.
prior to the market, is really the best time to use this particular scan because you've got tonight's overnight candles that are now populating the scan.
Correct. So for some reason, I had deactivated that strategy. But if we go all the way back to the open, you'll start to see this little group of symbols right here, and it was the bottoming tail, right? Okay, did this action on Friday, boom, 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 off to the races today. So notice that right off the bat, seeing all these banks come through, WFC, Key, H-Band, Charles Schwab, CFG, Goldman Sachs, right? But I was waiting, I'm like, okay, well, XLF, pull the doji, kind of doji-ish close on Friday. So I'm looking through here. I'm like, hey, well, maybe it showed up on the doji scan. A lot of things were coming through here as confirmation. Didn't see it come through the doji scan. Started picking through, and it's got to be just a smidge above that 50 period SMA, which is the blue line here. Well, that's why it didn't come through. So found that very interesting. Maybe these guys are leading the charge, and of course this is strictly hypothetical. Maybe these guys are leading the charge, and maybe tomorrow this guy gets above here and we get a push, of course, dragging more banking stocks along with it. That might happen, it might not, but I'm certainly going to be prepared for it in case that does play out, because there'll be some laggers hopefully to be had, or maybe the XLF goes first, maybe more bank stocks flood through and we get a chance to enter the XLF at a reasonable price, or maybe it's the other way around. We'll see how it plays out. But, just found that to be highly interesting since the XLF itself didn't show up. So that's all I got for today, Steve. Anything to add before we let Scott play us out?
No, I'm good.
All right. Well, for those of you who, might be in the test drive, welcome. Should be an interesting test drive. Definitely going to be one of our biggest ones yet. And then for those of you who might not be subscribers, or maybe you're on the basic package, you're thinking about upgrading, Scott's going to have a code for you. Save you some money if you want to do that.
All right, sounds good. On the
All
way
right,
out,
let me
a
get
couple
your
items
slide up here, Scott.
to
There
remind
we go.
everyone about. There is a podcast. We had a new episode out on Friday, so the best way to stay appraised of new updates for that is to make sure you're subscribed. Just search for Trade Ideas Podcast in the apps you use to listen to your podcasts in, and add us. That way you can get the newest episodes and be ready for the next one. There is a code that's good this month, Alpha Wave. Use that in July to save 15% off your first month or year of Trade Ideas. Subscribers who are on standard can also use this code on the upgrade to save the same percentage off your first month or year of premium as you do the upgrade. To apply that, just go to the homepage and click on the login in the upper right. Once you're in the account management section, just click on Change My Subscription. Use that code. Thanks everyone for attending. You can email us info@trade-ideas.com with any questions. We should have a recording of this up later on tonight or tomorrow morning. You get an email reminder tomorrow about how to find that playlist. And follow Jamie Hodge on Twitter at QuantBot, and Steve Gomez at TodayTrader on Twitter. Thanks all. Thanks Jamie. Thanks Steve.
See you tomorrow.
Thank you, Scott.
Later.
Steve. All right, everybody. Thank you. We'll see you tomorrow. Bye-bye.